I'm just not a fan of I'm a fan of giving the money back to the shareholders more in the form of dividends as opposed to buybacks.
Well, instead of listening to us
I agree.
novices,
Oh, we got Nick in the
let's
background. He
hear an
agrees.
expert, an options
Thank you, Nick. Thank
expert,
you.
Nic
Nick Chahine.
Chahine. He is a Marketfy Maven and the author of Create Income with Option Spread. Nick, I just got to ask, with that GE move on Friday, I mean, there had to have been some premium in there. You must have like passed out when you saw some of that premium in GE calls. Did you spring into action?
No, no, sir. No, sir. I missed that move. This was an incredible move. I mean, I don't remember seeing a stock that big move that much.
No.
I guess, it was part of my talking points today. It's never estimate the power of financial engineering. It's just incredible how well received of a decision it was. It would have been nice to see at least hold some and not give back as much as it did the next day. I mean, it's still fantastic up here and a definite breakout. But it was an incredible move and dizzying too. And can you imagine being shorted? Oh my gosh.
Oh, because the day before too, you might have been like when it ran up 60, 70 cents the day before, you might be like, oh, it'll pull back. It's GE. It's not going to
Yeah.
continue to go higher. There's probably a lot of traders fading it the day before, and then that news comes out the day, and you're watching it in the pre-market, and they must have been crawling under their desk looking for cover there. Anybody who was short that stock.
They may have made some room because the day before candle was very impressive and it was running up towards a trend. If you connected the two tops
Right.
before that, you would get room to like 26.2 or 0.15 or something like that. So they may have given it some room, maybe doing some credit call spreads up there, and then boom, it gaps up and goes. Man, that is one I did not play for sure, and you can't chase something like this. You would definitely, for me, I would think that I would be buying somebody else's profits at that point,
Yeah.
and I'm man enough to say, okay, I missed that one. Maybe I can catch it on the downside or the next one up. But I definitely cannot chase it up here, and that's something I shouldn't do in this environment. Chasing is really bad because there's no commitment from either side, the Bulls or the Bears. The Bears are doing just enough to just keep the lid on just a little bit, and the Bears are doing just enough to keep the lid on the Bulls, who are having the setups all over the place for breakouts, especially in the small caps, and they've been hesitating. So there's no commitment from either side because we're trading sentiments rather than fundamentals.
That's a great point there, Nick. And this has just been in the trading range, and you've talked about this for a while. What did you call? You call it like the tepid bull, didn't you call it, or what? What were you calling it last week?
Hesitant. They're
Hesitant.
they're very hesitant. They are. It's pathetic, really, the bullish effort this year because the setups were so bullish. I mean, this week's setup for the small caps, although they did break out the new highs finally yesterday, but for like a second, and then they immediately turned around and gave it back. And the day ended on a sour note because in one afternoon, they lost Dow 18,000, SPX 2100, and the Nasdaq 5,000, and the all-time high on the small caps, all in one afternoon when it looks so bullish in the morning. So there's no commitment, and to say it to show you the other way, like. I joke around, but it's really it is happening. Like this morning, I joked that, oh my gosh, are they gonna buy this correction of the ES being down to 2079 for a flash this morning? We call this a correction
I
now
know it's
because
crazy.
there's no commitment from the Bears. They're not piling on when they see weakness, and the Bulls are not. There's red carpets for new highs all over the place based on financial engineering, baseless basically, as far as fundamentals are concerned, and they're not walking through it. Maybe they believe they. It's almost like I said it before. It's almost like they can't believe they're this high up there. It's like they're looking around. Can you believe we're up here?
Well,
So
it seems like
it
everybody's fading all the moves. Like if you look at the biotechs, remember the big Biogen move there from a few weeks ago, the stock up to 480, and the sellers came in, they were booking the profits, and it comes all the way down. And then the last week, you get Altera and the Intel merger falls down, and Altera goes all the way down, and they just buy it back up. And then you also had another company, CTXS, which cut guidance. And by that day, the stock was already flat again. So it seems like you get a big move in one direction. The faders come in, and they're selling the pops, and they're still buying the dips. So
it's almost like all the professional traders that are managing big money are just watching CNBC and they're trading the headline. So it's like they know the bad things that are coming due, but they're playing chicken with them, and they're not reacting to them until the headlines actually hit the ticker tape. So we know that Greek is going to default unless they strike a deal, yet we're willing to headbutt with it until it happens and it hits the ticker tape and say, oh my God, Greek just defaulted. Well, yes, you've seen it for months coming.
Years.
Yeah, exactly. I mean, it's like somebody being upside down in their house. If the house is now worth $250,000 and you owe $500,000, there's no way you can work out a deal unless the people that lent you money agree that, okay, I'm going to take a 30% haircut or something. So, same situation that I see in Greece there. So it's coming, but the markets are not trading. So it's really bizarre because the Friday you mentioned the IBB, basically biotech, healthcare, whatever you want to call it. First of all, in my opinion, it's too big a box in the NASDAQ right now. So they are heavyweights, and they do sway markets. And and they're too much of a momo to do that. And it is dangerous for people who trade the indices, in my opinion. But that aside, that one Friday you mentioned, I think it was a 320 time frame, everybody was convinced that they were a buy all the way to the top, Biogen and all of that. And then the very next day, everybody on that I saw on CNBC, for example, was like, oh no, you got to take some profits, and everybody hated them for like 4 or 5 days in a row, and they went crashing through all their support levels for that. And it's like, what happened? Friday you said you have to buy it even at all-time highs, and today you're flipped around 180 without any explanation.
Yeah.
And people just react that way. So there's no commitment. That's why the meander trade works. That's why iron condors work until they don't. So by that I mean you can set some iron condor to create some income. By that I mean you take both bullish and bearish side of the argument. If you can find your ranges, you sell risk out there, spreads. And but you have to be nimble enough to be able to peel them off at the when you see signs of one yielding, like the bulls or the bears, and get out of the way. So that's what I'm doing these days, and I'm more comfortable shorting than going long big time or long range, just because I don't feel like we can crash up, but we can certainly pull back a little bit fast.
What do you take of this? I'm looking at Biogen here, and that's that's the big dog in the IBB. That came off hard, making the all-time high. Kind of having a hard time recovering. But if you look at the IBB, I mean, looks like it's taken back about half of that move from the all-time high here. Something's got to give, Nick. Do you think the Biogen is going to rally back up, or is this just a nice frothy retracement in the IBB here, maybe to get a lower risk short off?
Biogen has, first of all, a nice trend throughout for the past 12 months. It's still above the regression line if you want to talk about mean reversion. That one spike took it as a breakout from the, let's say, 2-month channel. And let me see if I can throw the chart in the room while I'm saying this. But then that one day from the Friday to the Monday, it whipped back and crossed the same ascending channel downwards and across both lines, and now it's like on the bottom end of that channel. So it's trying to stay in that small ascending channel of late, but it's struggling. So 420 is bad news for it, I think, and then it could probably head towards 400. But unless the markets in general break down, I mean, this is a beloved a stock, and they love to buy it on any kind of good news. I'm not as optimistic as the markets are, or I should say I'm not as comfortable as the markets are with all these spikes on financial engineering and just the momentum moves like Netflix. Okay, yesterday, as soon as I saw this move, I thought to myself, oh my gosh, this thing is going to hit technically 525 by Friday, before Friday. And then I saw myself just click buy some puts. I don't know why I did that. So I took a small lottery position. By that I mean it's a small expense, but just bought some, random puts. I picked May 8th and I bought at the, 440 level just for a breakdown, but not based on anything, but this is just a lottery ticket. Earnings for me are always a coin flip. It's absolutely a coin flip. The numbers can be delivered to me by hand from the CFO and tell, here's what I'm going to say. I still can't tell you how the markets are going to react to it. So that's what makes it a coin flip. not the company delivering, but the market's reacting. So I don't put money in the face of that. It's pure gambling. So I just take a small, if I'm interested, and if I find some cheap premiums, and I buy it for a lottery ticket, and then the better trade is set just after the earnings when madness breaks. And then I can do something with some information in hand. So Netflix, yes, it can hit 500 in no time, and it looks like in the pre-open it's popping too. But I still see that, international is more important what's going on in the U.S. And I also think that people that measure metrics on Netflix have it wrong. It's not a household count. It's more of an individual count. You may have multiple accounts in one household.
Nic, just going back to the Netflix just quickly here, do you consider, like, and I always look at this when the stocks run up basically 60, 70 points ahead of this report. So I know you say it's a coin flip there on the earnings report, but isn't it the fact that if, stocks run up this far ahead of the earnings report, and if it is a coin flip of the earnings are going to be good or bad, but the stock's already priced in a lot of the goodness, doesn't that mean the coin could more be in your favor to short the stock?
Well, yes, that's why I took puts.
Okay.
Instinctively, I went with the puts. Like I said, looking at the charts, it looks fantastic. It's like a breakout.
Yeah.
But it's instinctively I clicked buy puts. So because I don't know if I'm contrarian by nature, or I thought the move is done, or people are going to chase it and end up, or people are going to book some profits. I mean, you look at the last 5-6 candles; they're incredible from the 410 level. One candle, and then the next candle was a doji, and the candle after that was a gap up and go, and one red candle, and then another gap up and go, and another gap up, and here we are, another open. Just like the Biogen and just like the IBB, it can't go on like this forever. It has done it before. If you look at the last earnings report, they gapped up huge. Covered the open gap from prior report that was negative just as bad. So, but the way if you take out the big whooshes, it's not crazy that it can go up from here. So I may even turn around and buy some ridiculous calls before and play both sides of the fence, to make it financially sound if I can come up with some sort of a strategy there to cover both ends of the gamuts there. But I'd never underestimate the power. What if they say, yesterday the confusing thing, didn't they say they're going to issue more stock? So that's dilutive, right? And yet but then they had the upgrade. So yes, they said they were going to split, but they said they were going to issue stock. So usually
did they say they were going to split?
There's talk of a split.
That would be my concern.
Yeah,
so
yeah.
That would be my concern, shorting the stock ahead of the report, flat out. Well, puts is one thing, but if you're flat out short, that would be my concern. They come out with like a 10-for-1 stock split or a 5-for-1 stock split or something, because we saw what happened with Apple on that, and they love stock splits here. That would be the one thing I'd be scared about shorting ahead of the report.
If you take your ego and put it aside, you'd find yourself easier fights than shorting Netflix.
There you go.
I would short Netflix if I wanted to short Netflix. In the spirit of shorting something, I would short the Qs. They are showing clear lines of resistance. So that would be an easier short. It's the risk of announcements is diffused. You're not going to get blown out by a headline. One particular headline. You may be affected a little bit, but it'll be diffused somewhat. So these days, if you put your ego aside, you'll find yourself trading safer by avoiding shorting things like Netflix or going long things at the highs of Netflix. So there are easier trades out there. So I tend to want to just switch over and not even trade it fundamentally with big size. I can participate with a few $100s here and there just for fun. But if I want to make money, I choose the easier trade and find ranges where they're clear. I can see clear ranges in the small caps. They want to break up, but they've been hesitant, so I can maybe test the short there. But I see clear shorts in the Qs every week, and that would be the easier way to do it. Or the SPY, for example. Those are easy. Those are liquid. Those are options. They're dollar wide, and you can set them and move them and not break the bank and create some money. The yield can be 5 to 10%, and if you do it week after week with decent success, or every other week or once a month, you'll find yourself doing 20% yield on your money at risk by the end of the year, blowing out the performance of the whole market, which was 13% all of last year.
Quick question
So
to end this Netflix discussion. Stock Baylor wants to know why you just wouldn't wait until after earnings to buy the May option. Get a better idea of direction after the event.
that's why I do it as a lottery ticket. That's a good question. They agree with what I'm saying. I don't put big money in the face of that. Sometimes I find it an easy, cheap spread that I buy. Why? Because I made a ton of money on lottery tickets before, which were pure guesses. And they're not investment, but a couple of $100 that could earn me thousands, why not?
Yeah, they're great point. You were piping in on the GWPH discussion, and boy, back over 100 on good news of the Epidiolex here. Dennis, leaped into this $100 level, thinks it may be able to hold it this time. Sometimes I'm a little skeptical when you gap into the area as opposed to like building a base at like 98, 99, like that at catapulting. So what's your take on GWPH, GW Pharma?
I don't know them fundamentally, but I'm looking at the stock, and it looks like a breakout. You said it was going to open about a 105, right? So if
It's
I
come
connected
down.
it,
It's come down. It's come down quite a bit.
oh, it's come down.
Yeah, it's
Okay.
102.57 now.
Yeah, that still might be a technical breakout, technically speaking. No, maybe not. But anyway, if it does close above that line I drew, I posted a chart when I commented on it. But anyway, it looks like if you drew a line at the top, the two most recent tops, which may be all-time highs actually, you come up with a value of about 102 and a quarter. So if it closes above that, I guess it could invite more technical buyers from there. I'm not one to chase technical breakouts, but if I'm trying to short something, I stay away from shorting them. So this has the habit of spiking and coming back. That's what it's got going on against it. But now we've put in higher lows and a couple of lower highs, and this is another high that we're putting here. So the range is tightening, and it's gathering energy, and the energy has to dissipate either in a breakout or a breakdown. So I guess you could say it's market dependent. Let's put it this way. If the markets drop, it's going to drop. And since it's rose fast, it may drop fast as well. So keep that in mind. If you're trying to short it, like I said, there could be an easier short or wait out. The candle, don't do it at the open, or if you're brave enough, you can do it at the open. I'm not that brave. I mean, I trade daily, but I'm not a day trader, and I don't need to close all my positions, and I don't need to make all of my money in the morning on every move I see. Some moves I miss. I'd rather fight the battles with binoculars, meaning I pick boring trades, and boring is good. I sleep better. My yield is just about the same, so I don't have these 1,000% gains every day, but I have consistent gains that I can forecast and bank on. So GWPH looks like a breakout, but it all depends on where the candle ends up at the end of the day today, technically speaking.
We've been on the line with Nic Chahine. He's an option expert, Marketfy Maven. Joins us every Tuesday to discuss this week's options outlook. Marketfy Maven, you should check out his product. Nic, great input as always. Thanks for coming on. We'll talk to you again next week.
Thanks, guys. I appreciate it.
All right.